Hello, everyone. This is Ben Ricknauer from the Walls Group. It is about 5 o'clock Eastern Time in the evening, May the 4th. We are coming today to give you an update on where we are as it relates to the PPP loan forgiveness. As I mentioned, it is May 4th. We had anticipated, based off of contents within the law, that we were going to be getting some comprehensive guidance back on the 26th of April. So what is over a week ago today. So had originally been thinking that sometime last week we would be giving an update on what came out. But in reality, what happened is that April 26th came and went, and we still have not received comprehensive, receiving bits and pieces along the way. Some of it is relevant as it relates to forgiveness. Some of it is not relevant to forgiveness. Some of it is still covering instances as it relates to the application process. Some of it relates to banks and processes that they are utilizing through this time. With that said, there have been 3 things that we feel like have come out that are worthy of discussion, worthy of an update. So we want to bring those to you today. We have been keeping an eye on interim guidance that is being provided by the Treasury, in addition to the FAQs that they are issuing. If you are interested in those such things, we would recommend you maybe create a favorite. If you Google IRS Treasury Assistance for Small Businesses, that is kind of a hub where they are issuing information as it comes about. There's a frequently asked questions there, and then interim final rules as they are issued are going there as well. So the information we're bringing to you today is largely from those. As it relates to the frequently asked question, the most recent one we have received as we sit here is question number 42, just to give you a perspective. If you were to go and look at that, anything after 42 we are not covering because it hasn't been issued yet. So with that in mind, Dan's going to be giving you 3 topics, and I'll pass it over to him.
All right, thanks, Ben. Also, if you go to our website on our news feed, we should have links to some of those websites that Ben was talking about. But those are websites that I have up all the time. I refresh them a couple times a day. It's a good way just to stay on top of what's going on. So the 3 points we wanted to share with you today real quickly: the taxability of PPP loan forgiveness, the scrutiny of PPP loans, and forgiveness for employees who reject reemployment. These are all, Ben said there's 42 things in the FAQs. These are the things that have come up the most recently that we think have the most applicability to our client base. So those are going to be the things we talk about today. Taxability of loan forgiveness. Per the law, it says the income is not taxable. You can see I have there the excerpt right from the law that basically says that it is not excluded from gross income, which seemed pretty clear. And then the IRS came out and said, okay, don't include the income in your gross taxable income. However, the expenses that you use to generate that forgiveness are not deductible, which that essentially means that the amount that you're getting forgiven is essentially taxable. It's a semantics issue for them to say that the expenses are not deductible instead of saying that the income is taxable. I think most of us were surprised by this. Turn of events, considering the law was pretty clear about it, and considering that the president and his associates are generally more inclined to give relief from the tax standpoint. So this was a little surprising to us. That being said, there are some lawmakers who are pushing back on this. So this could change. If you're looking at this on May 7th, 8th, 9th, maybe this is different than it is as we're recording it. But as of right now, any amount that you get forgiven is going to be taxable, and you ought to plan for that accordingly. There has been some scrutiny of the PPP loans, as you may have heard. We've got Ruth's Chris Steakhouse, you probably heard, is a public company, got some PPP loans, and after being kind of publicly scorned, they gave those loans back. And they're certainly not the only public company that got them, but they were, kind of the center of some of the public outcry. The Los Angeles Lakers also got PPP loans. And, in the grand scheme of things, the Lakers are probably a quote unquote small business for being under 500 employees. But the owners of that enterprise certainly have more net worth than the owners of a general, small business as you might know it. So both of those entities ended up giving back their loans. But as these things hit the papers and hit the websites and those sorts of things, the Treasury felt the need to, respond to that, and they issued FAQ number 31. And in that, it says, as part of the loan, there's no requirement that you have the inability to obtain credit elsewhere, meaning you don't have to utilize all avenues of credit. You don't have to max out your line of credit. You don't have to go to your bank for loans before you apply for this PPP loan. That's not required. But what was required was a good faith certification that the PPP loan request was necessary. What does that mean? What it basically said was that the current economic uncertainty makes this loan request necessary. And that's a direct quote from the application. I'm missing my back end quotation marks there, but that is what it says. So the question is, what does that mean? Most people applied for this loan when the window opened in very early April. Maybe they didn't get funded until now if they didn't make it through the first segment and are working on being in the second segment. I know some clients who are getting funded here in the next couple of days or maybe even the beginning of next week. But still, when the application was made, certainly there was different economic climate perhaps than there is now, depending on your industry. So it says that you need to look at your current business activity. You also need the ability to access other sources of liquidity. So even though you don't need the ability to obtain credit elsewhere, you do have to look at your other sources of liquidity, which seems a little contrary to what the law says. Maybe one of the ways to kind of get out of it is that it says that those other sources of liquidity cannot be significantly detrimental to the business. So let's say you've got $1 million in the bank, and you have $1 million, and your payroll costs are $1 million per month. And you're shut down? Are you supposed to pay everyone $1 million and completely dilute your what you have in your cash reserves in order to bring people back on payroll, or would that be considered detrimental to the business? Clearly, that is a subjective measure, and I don't know how exactly they're going to scrutinize that without, some sort of bright line test. So, what we think you should do, we think that you need to have an evaluation, and the evaluation needs to have three components is kind of what I'm thinking here, and this could change. We're doing this without any additional guidance, and hopefully additional guidance comes out. But in terms of our preparation, if you think that your loan could be scrutinized, here are some things that you can do ahead of time, just so that you're not caught later with them saying, "Hey, you know what? We need you to tell us why you deserve to take this loan." The three areas that I see are: what were the circumstances as of the loan application date? Were you under stay-in-place or orders or stay-home orders? Were you deemed a non-essential, or in Pennsylvania, non-life-sustaining business? There was a number of industries that were placed under, those terms that maybe now have had some easing of those restrictions, but a month ago, they didn't know when they were going to get back to work. So what were the circumstances when you applied for the loan? What's been your reaction to the loan proceeds? If now that you've gotten a loan, you've hired back more people than you otherwise would have, to me, that's indicative of the loan doing what it was created to do. If you were only going to have 50% of your workforce back had you not gotten a loan, but now you're bringing 80% of your workforce back, to me, that is a justification that the loan was needed, and that as a business, you're doing what the loan and what the law are asking of you. And then the third thing is the sources of liquidity. you can talk about what sources of liquidity you have and how that impacts your, if it's detrimental to the business to dip into those. So someone like the Lakers, who have owners that have, combined net worths in the billions, probably have pretty adequate sources of liquidity that would not be detrimental to themselves if they were to pay, some of their $20 an hour employees for a couple months. But like we said, an entity that has $1 million of payroll a month that only has $1 million in cash absolutely could be detrimental to the business to use all of that liquidity. So those are the three areas that we think you ought to at least look at. If you determine that once you've done that, you've taken the loan unnecessarily, contact your bank. If you return the proceeds in full by May 7th, so just a couple of days from now, you'll be deemed to have met the good faith certification. If you took, say, a $3 million loan and you say, well, I think we only needed half of that, and you return half of that, does not necessarily, make you immune from any sort of scrutiny, which we're going to get to in just a second. Basically, the only way to avoid any scrutiny is to return the entirety of the loan in full by May 7th. And, realistically, that's probably not going to be the appropriate response for many of you listening to this, but it could be for some. So certainly contact us if you've got some questions about that. Contact your bank, but that's what the FAQs say. If it's returned in full by May 7th, you'll have been deemed to have met the standard. There is a plan for audits or at least some sort of review by the government of large loans. And terminology, I'm using the terminology large loans. The specifics are anything $2 million and up will be reviewed. So if you got a loan for more than $2 million, you want to just make sure that you're documenting things well, because there's a good chance that you'll have additional documentation requirements, perhaps above a company that got a loan below that. We've not seen any further guidance on that. Hopefully that is coming, but we can get blue in the face talking about hoping for, further guidance. So we continue to look out for the further guidance. That's why, as Ben said, to keep that page bookmarked, because that's where the guidance will be. Realistically, this is going to be a difficult endeavor for the government. If anyone's ever been through an IRS audit, that's usually just of one entity's taxes. Maybe it's a 1040, a personal tax return. Those rarely go quickly. They can take months, even if it's an efficient process. Sometimes they can take years. There's thousands of loans that are going to be more than $2 million. So to assume that they're all going to get done in a short period of time, the banks have 60 days to look at the application, and the SBA is another 15 days. So during that 75 days, if they're going to be analyzed and scrutinized, that's an awful lot of work for the government to do. Not saying it's not going to happen, but it's going to be an interesting process for sure. Okay, just yesterday, the latest round of FAQs came out. There's 3 new ones, and so this talks about what is a common scenario. And the common scenario is we want to rehire our workers, either because we have to maximize forgiveness, because we have the need to do it, and we want to meet the spirit of the CARES Act. Any of those things. So you have work that needs to be done. You want to try to maximize your forgiveness. You're meeting what the law wants you to do, and you're trying to rehire workers. A question we've got time and time again is, what do I do for my employees who may be making more on unemployment than they are on payroll? And this is a topic we talked about 20 days ago when we did our first webinar on this. It's still an issue. The Treasury has tried to add some clarity to this. So the workers say they declined their offer to return to the job, either because they're making more money on unemployment or because they have a safety concern. So what the most recent FAQs said is that there's forgiveness available for employers in this scenario. FAQ number 40, I encourage you all to read it. It says that if there's been a good faith written offer of rehire for someone who is laid off, and that means that there's the same hours and the same wage rate and that you actually intend to bring them back, and you're not just giving lip service, but it's a good faith offer and you want them to come back, and they reject that, and you document that the offer was rejected, you can get forgiveness of your forgiveness won't be hampered necessarily by that. Now, what exactly that means, I don't know. Does it mean that you can increase your spend for what you would have paid them? Does it mean that you can increase your FTEs? Both. We don't know what that means. But the FAQ does say that there is an interim final rule forthcoming, which is very rarely does it say that in FAQs. So hopefully we can take that as it's written, that there's going to be more information coming on that, and that there'll be a new interim final rule. The other thing that it says in that FAQ is that this may affect employees' unemployment compensation eligibility. That's a little bit of a murky area because the law is a federal issue and unemployment is usually dictated state by state. So that's kind of an open question. Perhaps it'll be dealt with in the interim final rule. So that's a very important new happening. So if you've got workers that you want to come back and you're concerned about whether or not they're going to accept or reject your offer, make sure you document. Make sure you have the written offer. Make sure you document the rejection, because it's going to be beneficial for you in the long run. So what that benefit is, we don't know, but it does sound like there's going to be some benefit. So those are the three topics that we wanted to touch upon today, just until we get some more, widespread guidance. Certainly appreciate your time here, spending 15 minutes with us as we go through those three things. As always, if you've got questions, feel free to contact us directly. There's my email, there's Ben's email, there's our phone number. We'd love to hear from you. We want to help you. Let us know how we can do so. Thank you very much and have a good day.